But our next guest sees an expiration date for the gains. China expert David Riedel runs Riedel Research. He joins us now. David, great to see you. Why don't you think this lasts?
Well, I think they're kind of pushing on a string. It was a good number, and I think the most recent stimulus is going to be helpful. It's going to help them get their 5% for this year, but does it really solve the structural problems in the economy for 2025 or 2026? I think for now it's a trade rather than an investment, but there's definitely money to be made.
The structural economies structural problems in the economy being youth unemployment, the demographic situation, the housing overhang. I mean, what is it?
All of the above. Beijing desperately needs Chinese households to diversify away from just real estate. They really need to start putting money into the stock market and the bond market and things like that for savings. They need to encourage small and medium-sized enterprises to be more successful. They need to be less top-down and more diverse in their policy making across that large and very varied country. So there's a lot of things they need to make their economy more nimble and solve some of the problems you pointed to, like the youth unemployment, which is a particularly vexing problem for them.
So, David, when Melissa pointed out a couple of different things, you said all of the above. It sounds to me, is this, and I don't want to be hyperbolic with the language, but is it a death spiral? Or where does it happen with China when you think about this? The way you just stated that case, it sounds as if there's no way out.
I wouldn't bet against China in the medium and long term right now. They have a lot of resources at their disposal, obviously a huge domestic economy. They have the capability to make technology to really diversify their economy, but they haven't been able to do that as well as one might have expected in the last 15 or 20 years. The Chinese had an old saying that they needed to get rich before they got old. And I wonder if they find themselves in this sort of middle income trap, which has been a problem for some global economies like Brazil, for example, which could never sort of grow its way out of rising costs.
But
so China has a lot of good. China has a lot of great resources and a lot of great options, but they need to start taking advantage of them so they don't turn into Japan.
Doesn't it seem like the Chinese government is making a lot of effort? I mean, it seems like every day, there's some sort of stimulus announcement. Are they showing, at least in your view, that they're willing to do everything that it takes?
They're willing to do a lot of things, and they're willing to do things that further the goals of Beijing. Beijing's goal right now is to sort of insulate themselves from the global economy to the extent that they can. They've been shown by the U.S. that the U.S. can put restrictions on chips. They've been shown by Europe that they're going to try to keep Chinese EVs out of that market. There's a lot of barriers going up around the world. China feels like they need to take care of things at home and have a strong domestic economy. Some people say a fortress economy ready for the kind of barriers being thrown up now and in the future against Chinese trade. So they really do need to do a lot of things at home. And this most recent announcement about technology is an important one. They need to have homegrown technology, and they need to keep building on that. The problem is they don't seem to have the confidence in giving money to their citizens directly to spend in order to boost consumer consumption. Consumption has been down. It's been weak. It never really properly recovered, other than sort of revenge spending coming out of COVID, never really recovered from the pandemic. So I think they need to...
Well, sorry, David. Longer term, this rally doesn't last, but shorter term, how does one trade this? How does one perceive these bumps?
Absolutely. So technology, some of the well-known names, Tencent and Alibaba, great ways to play this trend. I think you play regional trade through Hong Kong-listed names like China Merchants Port Holdings, which I think are going to be good. I think for now you stay away from the banks and from the airlines and the oil companies, because I think they're diversifying away from some of those big structural things. But I think you can definitely benefit on the technology side and go along with Beijing's desire to have a homegrown technology industry.